What if the biggest problem in agriculture wasn't really about farming at all? What if it was about the system around the farming? Today, we're going to break down a really powerful model designed to completely transform agriculture, empower farmers, and build real, lasting wealth, literally from the ground up. Okay, so it all kicks off with this one simple but honestly incredibly frustrating question. All across the continent, you've got millions of farmers working tirelessly, producing the food that we all rely on, and yet so many of them are stuck in this cycle of poverty. It just doesn't add up. Why do they produce so much but profit so little? And this right here, this visual really just lays it all out. On one side, you have the farmer. They're the ones creating all the initial value. But then on the other side, you have this long chain of middlemen who are just perfectly set up to capture almost all of that value before the product even gets close to a customer. See, this isn't a flaw in farming. It's a flaw in the system's architecture. And that brings us to what we can call the farmer's paradox. It's this massive structural gap in our food system, and really understanding what it is, that's the first step to actually fixing it. So, what does this paradox actually look like on the ground? Well, it means farmers are basically forced to sell their raw crops at rock-bottom prices, a lot of the time because they just don't have storage or processing facilities. Then the middlemen swoop in, buy it all up for cheap, and they're the ones who sell it to the big processors, capturing the lion's share of the profit. And honestly, the most tragic part? So much of that produce just spoils before it can even be sold. It's a huge, huge loss of value right at the source. So the big question is, how do you fix a system that's so fundamentally broken? Well, you don't just patch it up. You have to architect a better one from scratch. So let's get into the solution. It's a model called structured agri-processing cooperatives. So what in the world is that exactly? Well, it's a model that totally flips the script. Instead of the farmers just growing the crops, they collectively own the factories that process them. It's a game changer. They go from being simple suppliers of raw materials to becoming owners of a modern value-adding business. Now, this is where it gets really, really clever. The secret sauce here, it's not some new machine or a miracle fertilizer. The real innovation is actually in the legal architecture. It's a special kind of hybrid model designed specifically for this job. Here's how it works. It's a two-part structure. First, you've got the cooperative. This is owned 100% by the farmers. Its main job is to guarantee a consistent, high-quality supply of crops. Then, you create a totally separate limited liability company. Now, this is the engine. It owns and runs the processing facility, and it's built to attract serious outside investment. And the key is that these two entities work together in a formal partnership, which gives you a stable supply chain on one hand and the money you need for growth on the other. Okay, so the structure is smart. I think we can all agree on that. But how does it actually make money? Let's take a look at the business blueprint for creating and, this is the crucial part, capturing value. At its very heart, the whole revenue model is incredibly simple. You just stop selling the raw material for pennies, and you start selling a finished, processed product for dollars. The real profit is found in that transformation. Just take this example, right? Instead of selling a crate of raw tomatoes for a few bucks, the cooperative now processes those exact same tomatoes into tomato paste. It's a product that has a much longer shelf life and, of course, a much higher market value. And that gap, that difference between the raw price and the processed price, that's the profit that now flows directly back to the farmer owners. Now, let's be totally clear about this. This is not a software startup you can run from a laptop. No way. This is a serious, asset-heavy business, and it needs significant capital. We're talking about building actual processing facilities, sophisticated storage systems, modern equipment, and the whole logistics network to tie it all together. So, where does all that money come from? Well, this is where that hybrid structure really starts to shine. It opens up a whole range of different funding sources. You can tap into things like government programs, development banks, and grants. But most importantly, because you have that separate professional company structure, it becomes incredibly attractive to serious private investors, including diaspora investors who are always looking for these kinds of well-structured professional opportunities. And this is where it gets really exciting, because this isn't just about building one successful project in one place. This is about establishing a pattern, a blueprint that can be scaled up again and again. And the best part is, this model is incredibly versatile. It's not just a one-trick pony for a single crop. Think about it. You can use it to process cassava into gari, turn raw paddy into high-quality packaged rice, or transform cocoa beans into chocolate. The crop might change, but that core principle of adding value, it's exactly the same. And this is maybe the most crucial point of all. The problem that this model solves, it isn't unique to one village or one country. It's a widespread continental pattern. The exact same challenges, fragmented farming, huge post-harvest losses, the stuff you see in Nigeria is also happening in Ghana, in Kenya, in Tanzania, and so many other nations. And what that means is that the opportunity to replicate this solution isn't just big, it's absolutely massive. But, let's be realistic. An opportunity this huge doesn't come without its own set of challenges. Architecting real wealth means you have to understand both the risks and the rewards. So let's break that down. And these risks are very, very real. Governance is everything. Poor management can sink the entire thing before it even starts. That high upfront capital cost is a massive hurdle to get over. And of course, you've got to navigate the unpredictable worlds of politics and regulation, everything from sudden policy changes to strict food safety standards. These aren't small details. They have to be managed perfectly. But, and this is a big but, for those who can manage those risks and get the structure right, the rewards are enormous. A well-run, profitable agro-processing company isn't just a feel-good local story. It becomes an incredibly attractive asset for some really major players. So what does that exit potential actually look like? Well, think about it. Major consumer goods companies are always looking to secure their supply chains, which makes one of these co-ops a perfect acquisition target. Private equity firms could see it as a hugely valuable asset to buy out. Or it could just become a strong, stable business that pays out dividends to its farmer owners and its investors for generations to come. And this all brings us to the single most important idea in this entire explainer, and it's captured perfectly in this quote. Africa does not lack agriculture, it lacks structure around agriculture. The potential, the land, the people, it's all there. What's been missing is the right architecture. So here's the final takeaway. Creating real, sustainable wealth in this sector isn't about just planting more seeds. It's about deliberately designing and building better systems. Because at the end of the day, agriculture isn't just farming. It's an entire economic ecosystem. And if we want to see it truly thrive, we have to be the ones to architect it.